All right, welcome back, y'all. So today I want to talk about how I'm able to do the things that I've been doing the last few days, since last week. Since last week, I've been starting to trade every day. Even though this is demo, I'm trading every day. I trade. I have a live account as well, but I'm trading every day, and I'm recording before and after. I take an entry, and I'll wait to see how the day goes, and I'll post the update so that it can help me get better at identifying trade entries in the present time. We all know about back testing. We know about those type of situations, but it's just good to see have that in game reflection. How was you in the first quarter? How did you end the fourth quarter? Being able to see that every day, because we have to destroy the delusion of, if it ain't live traded, it ain't real. Because you cannot expect to just trade live and even if you are profitable, just trade live and be consistent without perfecting the craft of trading through practice. Nobody that's great only played or did what they did when it was um, time to do it in the real time. Nobody that was great didn't practice. Say that again. No one that was great at whatever they accomplished did not practice. They practiced. They put in the time. They put in effort. They sacrificed so that when they did perform their skill or did perform their gift, it was well crafted. So you got to practice. So today I want to talk about the second leg, and obviously, let me just help you guys out with it. Before you can identify the second leg of an M or a W, you have to know how to identify the first leg of an M or a W. Okay? Before you can identify the second leg of an M or a W, you have to be able to identify the first leg of an M or W. So I'm going to look at a couple days we had. I mean, the last 5 days have all been great examples of M and W trades. Like I said, but you cannot properly take advantage of these trades if you do not know how to identify the first leg. So let's start here. I want to go back a few days ago, December 10th. And I'm going to go to this is a good time frame to stay on because the 15 minute and 30 minute are good. But this one will help you to see exactly what I'm talking about without so much back and forth. So, okay. December 10th, you have this push down, right? It pushes up, right? Now, the one thing I want to say about the first leg is always the reference leg. There will not be any volatility on the. There was never. They're never doing any stop hunts. They're never doing any position. Nothing. It's the one that's real predictable. The first leg is real predictable, but you want to see an obvious pullback to where, if you're not careful, you would assume that they're trying to convince the opposite direction, and in this case, they're trying to convince the buyers to buy because of how much movement has occurred. Okay, let me zoom in here. Right. So if you just look at they broke the trend. If you just look at how rigid that was, right? Real predictable, lower highs, lower lows, lower highs, lower lows, lower highs. Then they break that, come to a high point, right? This is the first leg of the W. There's no stop hunts here. There are no major moves. The low fell within the range of the previous day's low, right? Nothing major, no stop hunts, right? That's the first leg. Now the second leg, on the other hand, though, is one that will produce the stop hunt. It will have more volatility than the first leg because they have to do the fake out. They have to convince the sellers that this is where they're going to go. All right. So the first leg is a reference. The second leg is where people blow their account or people get faked out. Those who trade breakouts the wrong way, they get broke quick. Okay. So We wait. We don't trade any of this. We wait until the ones that the setups that I like are the ones where the second leg goes in this case the second leg of the W goes lower than the first leg, which is the reference point, because it shows an obvious money grab before they go in the direction of the trade that they want to go in, right? So what you do is once it goes beneath there, if you're on the chart, right, you just take you can set a buy stop here, or you can literally just wait until price comes here into your trade and you're good, right? Then it comes, here's another opportunity. It goes to the M. It gives you a high, which is the reference point, and then it gives you an obvious pullback, right? Obvious pullback. This is the first leg of the M, and like I said before, there's nothing, no other second leg than the second leg that goes higher than the first leg, right? This is all I've been doing. So this is the reference point. This is the point where they give a breakout. And here's the thing: the breakout to the upside is correct, right? But what makes the situation deadly for most traders is they don't realize how much gap is between this high and the previous level that was resistance that has now became support. So unless you want to play, unless you got 300 pips of space that you can play with, you shouldn't be buying this. And it's just it's bad. It's just bad practice to jump the gun, even if you had the liquidity to handle a 300 pip drawdown, because it's going to take you all day to get in profit. If you entered here, it would take you all the way over to here to get back out of the red, which by then, if you're just looking at the charts, depending on what type of trader you are, it would have been too far gone, right? And even if you let it ride, that's still a 1-to-1 basically. Whereas if you wait till it came down here, it'd have been a better trade. But nevertheless, let's take back to the second leg strategy. So you got this high, comes down and give you the first leg. Now you see how much it pulled back. This was a 175 pip pullback back to this level, right? Structure, obviously, right? And then second leg goes above it. You wait, and then you enter here for the sell. Comes down, right? And it literally repeats. Comes down, gives you this pull, and this pull came back to this. It came back to here. It's all structure, right? So this came back to this one. Let me straighten this up a little bit. Let's see where we at. Come on down. Right? Then this high came back to this high. That's the first leg. So what you're waiting for is this. It came lower. And this was an obvious one because obviously we know about the moving averages, but just for the sake of having multiple things stack upon each other, right? This came down to here. And it gave you sometimes you'll get a second leg within the second leg, which is even better because you have 2 points of reference as to where you should enter your trade. You enter the trade and you go up. It goes up. All right. Now, if you missed all this action, which most times some people will, miss all that action. And so you got a slight, this is still a range situation, but we know that it's going up because everything is up, right? The range is to throw people off, to get people to think that it's going to come down when it's not coming down, right? So you got these lows, you got this breakup structure, which is really small, but it came higher than this high. When price comes back down beneath the body of these candles, you can enter for the buy. Enter for the buy. Right? So it looks like an M, but it's not an M. It's a W. W's are for the bull arches. See, the difference between this one and this one is that this setup occurred as everything was progressing above the 50. This setup occurred when both 50s are already in play. Everything is above. Everything is up, right? So let me go ahead and close these out real quick. Yeah, let me go ahead and hop in this. I feel like it's gonna go down too. Boom. All right. So, like I said, second leg of the W, price goes up. Now, it goes up. It gives you this high, drops down to this low, and then gives you a second leg, because you can have this comes down and you literally just wait. It goes up. Once price comes back to here, you sell, right? Now here's the cool thing, and I posted this. If you can look at all the videos that I post from last week, this is Friday. I saw this as an opportunity because price came beneath here. This was the first leg of a big W. Price came beneath here, so I entered in here for the buy. No, I didn't use that, obviously. I entered in here for the buy, and it went up. By the end of the trading day, it was right here, and I got out. But price went to the highs, right? It went. Now this becomes the first reference point. You see how it goes from smaller time frames, and you can see how it even plays out on bigger time frames. This for Friday leg became a reference point for Monday's leg, right? So now you got a high and a high. So once price came above this high, you wait until it comes back beneath and you sell. That's all I'm doing, literally, every day. And like I said, the trade that I took last night was a perfect example of this. First leg of the W. And once price came beneath this low, I waited until price came at least to here, and I entered. Even though I had some drawdown still, I entered. And as you can see prior to this video that I posted, I ended up in profit. So that's really all there is, guys. I mean, the second leg strategy is not new, but most of us don't know how to identify the second leg. You cannot identify the second leg until you identify the first leg, because the first leg is the reference. If there's no reference to the second leg, how do you know whether it's the second leg or not? Because you can even have, like I said before, if you want to clear all these objects out, because you have everything is connected. So look at the bigger time frames, right? You got this is the first leg. This is the first leg, right? This whole move is the first leg, the highest ever been. This move is right here. So you tell me, even if it don't go any higher than where it is now, you know that we're definitely into the second leg in December, right? We're in a second, and then also it gave you a W within. It's always an M in every W and a W in every M, right? It gave you the W. If you need me to show you that, I'll show you that as well. It gave you the W to push back up to the top, right? It pushed back up to the top. So you got to know that at some point it should do this, right? It did it before, right? It gave you a high, it gave you a little bit higher high, and it says same patience, because these wicks are points. These wicks are points. It gave you this high, gave you this high, gave you this first leg, pushed up higher. And then once it comes down under here, it's good. You could have held that one trade until the beginning of the low of the next month. And this is how you're able to take these same simple strategies, same simple outlooks and perspectives, and take them and do great things because you understand that it's all the same stuff. Nothing is new. Let me see if I can find another one for you. Nothing is new. Here's one. Here's an obvious one. Here's a high, and you can see the low. You can literally see how much it drew down. And if you have the patience, this is the high. It drew down here. All you would have to do is wait until price came above this reference point, because the second leg is always going to be more volatile, and then sell, and you could have held that one trade to the low of the next month, the low of the same month. Now it gives you a low, comes back, gives you a high. Price comes down, probably gave you a second leg within a second leg on the smaller time frames, but where did it go? It went up. There's nothing new. Nothing is saying, oh, this is something new. It's the same thing. It's the same stuff over and over again. These are swing trades for sure. Okay? Thousands of the pips. Hundreds and thousands of pips. Same thing. Gives you a high, comes down, gives you a higher high, using that first leg as a reference. You wait until price comes down, comes down to the previous first leg's high, and you sell that thing. That's it. Even with this stuff, watch this one. Right? It's still big W's, big M's. So all this, and then it dropped all the way down here, and it came to this low, and you think it just went up like this because it had nothing to do? No, it's a second leg. It may not happen within the same month. It may take months for this situation to set up. People say the market tripping. No. If it's active volatile to you and you're trying to figure out why, it's because either you're not seeing far enough, or you missing something. It's the same stuff over and over again. Same stuff over and over again. So that's all I want to say for today, guys. I'm gonna post this to the page, post it to my YouTube channel, and then post it to my Facebook page. But you guys have a good day. Watch this over and over again. I mean, once you see it, you cannot see it. So that's all for today. You guys have a good day.